Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today, I am absolutely delighted to introduce you all to Roger Vincent from Trade Ledger. Roger and I have just been talking before coming on air, and it's a really, really interesting set of problems that Trade Ledger are solving. I think it's pretty critical, couldn't be more topical at the moment. And I'm really, really excited to get under the skin of all of that as we continue through this conversation. But before we get into all of that, Roger, it's an absolute pleasure to have you on here today. How you doing?
Very well, and thank you for having me. Yeah, it's a busy time in the business and the banking industry. Put it that way.
There's been a few headlines recently. I've been aware of a few of them. And look, that's that. We called you the knight in shining armor earlier on in terms of what you guys are doing within that, and I think you're well positioned to help out with everything. But we'll get into all of that in a second. Before we do that, just give us a quick intro to yourself, and I'm going to put on a string with that in a minute, because looking at your LinkedIn, it was one of the more unusual sort of routes to where you are now that I've seen. So I want to go into that. But before we do that, tell us a little bit about yourself and the business.
Yeah, sounds good. So as I said, I have been with Trade Ledger specifically for the last 5 years, which has been probably the most intense 5 years I've ever spent in a business. But I would say that I kind of know what I got into. I didn't quite know that we were going to experience a global pandemic and the banking crisis, etc., that we're experiencing. And I didn't quite know.
You didn't pick that.
No one warned me. But previous to that, I actually had a very comfortable life in a corporate. So I was actually various divisions of the banking sector, both on the banking side, procuring data, insights, technology from vendors, but also and predominantly kind of on the vendor side, selling solutions. Firstly, building credit risk scorecards, kind of putting my maths and stats degree to good use, and building the credit scores that you and I both check on our apps these days. Kind of decided I wasn't particularly good at that. So, or there was much better people around me doing that. So I decided to go into consultancy and start kind of selling those solutions into banks and building up the team. And I suppose, yeah, got a bit hooked on selling into banks, and definitely got under the skin of kind of how potentially broken banks are and sort of where they need help. Fell into the world of open banking as it was kind of emerging in the UK. It's now big business. I think 4 billion was the last mark that it was worth. And a lot of people that I've seen exit good businesses in that space. But yeah, I was working for a corporate trying to react to that and sort of driving the strategy. Managed to go across to Australia, meet a couple of crazy founders that were starting a technology business. And yeah, 5 years later, I founded the UK, been working with some of the largest banks in the world. And yeah, as I said, we've been on that 5-year roller coaster that is very early stage startup. So I was kind of employee number 7. All of the team are founded and the business was founded in Sydney. I brought it across the UK. We moved the headquarters across to the UK and we started kind of scaling the business out of the UK. So really that's a journey that I've been on for the last 5 years. I won't go into that because that's a much longer story than even half an hour is worth. But
well, you've had some interesting sort of roles in that business as well, because it started off in innovation, didn't it? Then moved into managing director and then moved into sales where you're at now. Talk to us about how that sort of evolved. I mean, I know we're agile, don't we, as startups, and we go through those sort of journeys, and you're wearing many hats. I mean, you could probably have had every title in the business at various stages if you're employee number 7. I'm also seeing quite a lot of Aussie businesses who've come over here in this sector and been quite successful recently. We've just helped put the first feet on the ground for another one today, and that's becoming a little bit more of a norm as things go further forward. So, talk to me about being. I mean, you've had some early mornings and late nights, I would imagine, and all of that. How's that been?
Yeah, I mean, it all started off lovely, right? You go into WeWork on day one and you start playing with all the puppies and everyone's happy and you get free beer. I think within 6 months and speaking to the world's largest trade bank and signing them up as a customer kind of changes the gear that you're in.
Yeah, you've done well with that in 6 months as well, with the procurement processes in big banks.
Yeah, well, that was just to start the procurement process. So I won't profess to signing it in 6 months, but it's not your typical kind of journey from, okay, let's go and land headquarters in the UK, sign up a customer, and then suddenly you've got the world's biggest customer that you could ever have on your books, and you've got this whole desire or whole requirement to build a team around you. But that was the journey that I went on. I think from my personal perspective, it's just kind of that world of startup and scale up. I mean, if you're a consultant kind of looking to go into this space, I'd say you're very well prepared. If you can put together a good pitch deck, if you can kind of wear different hats, if you're good with numbers, if you're good with kind of strategy and you're good in front of clients, they're the kind of skill sets that you always need to go into a startup. And I suppose when I look at people that have spent too much time in corporate, if you've lost that edge and you've become too specialist, you're probably not right for the startup, and you've got to wait for your right point in the scale up journey for when they start to get a bit more specialist. So I was probably victim of one of those, right? I was an all-rounder. I was dealing with strategy. I was putting together pitch decks. I was trying to build business cases. And I remember the first week that I kind of landed, I sat down with the founder and I said, what do you want? What should we do? And my vision of that was, let's build a 3-year plan and put together what I called a growth playbook, right? Because I was used to that from the American corporates that I worked. And he said, you are absolutely deluded. Like, what on earth
That's always good feedback, isn't it?
Yeah. And I was completely in my own world. I was like, surely you can build a plan. You know where the business is going. He said, no, scrap that idea. And we got in this big argument. But it's the best thing that's ever stuck with me. And if you want to get under the skin of kind of my journey, we're spinning plates. And you are always spinning plates until you achieve some sort of stability. And yeah, we had this big shouting match, and it was amazing, right? So we went and had a beer afterwards. But that gives you an insight into what the world that I've lived in for the last 5 years is spinning plates. And you're trying to catch those plates before they fall. And they could be anything from funding, from customers, from jobs that need to be done. And quite frankly, again, if you haven't hired someone, you just have to pick up the job. I've kind of continued on that journey to wear multiple different hats through. Ignore the innovation role. That was just a catch-all statement. So that was the first year or so. Then I kind of went into I forget what I did actually in the first few years. I think I was just pretty much creating pitch decks to support Martin and going out and trying to sell. Then I kind of inherited while we grew the team in the UK and started to kind of assume that position in the UK, but naturally we were a global business. So then we became a bit more specialist, and I moved into the sales position. And I have no doubt over the next year or so, I will move into a different position as the business changes and it requires different things of me. So yeah, it's been a whirlwind.
It's great fun though, isn't it, as well?
Oh, it's amazing fun. Like as long as you get on with the founder. I mean, it's very intense not being the founder, but having to work with the founder. And finding out your different
especially a founder that's as far away as that as well. I can't imagine that's the easiest thing in the universe.
Well, actually, I had it worse because I dragged him back to the UK away from the beach. He was enjoying a lovely life in Australia. But I think between you and I, he knew that he had to move across to the UK. So yeah, I've got a grumpy founder that's actually especially in winter, having to live in London when he doesn't want to. But yeah, we've worked through that.
Fantastic. So talk to me a little bit about the business. What are you guys solving at the moment, which is a pretty significant issue, and some pretty heavy stats around that as well. Talk to us about why you're in existence and what you've been doing over the last 5 years to solve it.
Yeah, so we have big ambitions, and I mean, 5 years ago when I joined the business, these kind of vision statements and mission statements were put on paper, and I didn't disbelieve them, but I kind of put them on paper thinking, okay, well, that's kind of aspirational. Like, why are we even doing this? Like, surely someone else is going to come along and solve this. But the vision was that the world of connected data and technology is actually maturing, right, rapidly. The availability of data is something we all know has taken over our lives. But there is one area within financial services that literally has not been touched either by the internet or by any of this data that we know is now available in the ecosystem. And that is the world of commercial and corporate banking, and more specifically, commercial and corporate lending. And if you're going to badge this as a solution, it's the working capital solutions that businesses and corporates need to do multiple different things, but predominantly it's to survive as a business when you don't have cash, or it's to grow.
Yeah.
And I think working capital solutions or liquidity solutions can be used in various ways, and they're called different things. But fundamentally, because businesses trade on credit terms, typically, there is an unbelievable demand for working capital solutions that help to plug the gap between when you invoice someone and when you get paid.
Yeah.
So that working capital gap stands at, there's various numbers, but about 10 trillion, I think, is the one that we quote. And funnily enough, like that working capital gap hasn't changed. If anything, it's got worse. Yet we all know that small businesses are the lifeblood of not just the UK economy. What have we got? I think about 6 million SMEs. That was pre-COVID in the UK. Like, they're the lifeblood. Like, they could be very micro, small SMEs, or they could be growing SMEs. They could be mid-market. They could be the Coca-Colas of this world, or the large corporates that we experience. But each one of those needs finance at some point within their life cycle, whether it's a global pandemic that forces them to go and get a COVID loan, again, just working capital because there was no business, or whether it's they've signed a big, exciting contract, and in order to fulfill that contract, they need to go and manufacture something, manufacture goods. The whole world is kind of, I like to say, lubricated with kind of working capital and funding, just like yours and my life is lubricated through that. We can't afford to go and buy a house outright. A business can't afford to go and pay for goods outright. Why should they, right? They're not just sitting on a pile of cash like the rest of us. So yeah, Trade Ledger is there to try and solve that working capital gap, but we're not doing it ourselves. We're doing it through technology, and we're doing it through the existing banking ecosystem that is already there. So we're trying to fix the banks rather than to challenge the banks.
Well, there's loads there that you've just said that's buzzing around my head. But I think I'm very passionate about entrepreneurism, particularly in this country, as you highlighted before, and you call it the lifeblood. UK PLC, I think, has been, its performance over the last couple of years has allowed us not to dip into recession at the moment, actually perform at a much more robust level than all the economic, the macroeconomic global factors sort of point at. And if you were to allow yourself to be painted the victim, you'd probably say this is a cluster of some of the biggest issues that you could ever wish to live through, from cost of living all the way through to the Ukraine situation, through to still the legacy of the pandemic, through to funding issues, through to ultra inflation, etc., etc. I mean, that is a difficult set of circumstances for any business to be able to deal with, let alone everything that's come through in tech and the collapse of banks and everything that's on the horizon at the moment. But I think this robust performance from UK PLC has been an extraordinary thing to witness, and I think it's businesses like yours who've been able to help that and say, right, how can we adapt? And we use the word innovation earlier on, which I think is probably a really overused term generally. But it's how can we make sure we do these things and create this platform to allow companies to grow. Now, I think traditionally a lot of people have been frustrated with the banks and their conservative and traditionalist ways of going out and doing business. And I'm really encouraged by what you say there, to say, look, this isn't about disrupting it, which I think has always been the sort of cool FinTech, us v them, David and Goliath sort of story to come into it. But actually, how do we make it better? How can we improve it? And that seems the slant you're taking on it. Expand on that. Tell us a little bit about how you're managing to deal with that.
Well, it said that you've got a thriving FinTech ecosystem, right? And some of them are going to fall by the wayside this year, and some of them are going to be victims of kind of the various different challenges that you mentioned. I think Trade Ledger as a whole targets a segment of the working capital gap, or targets a segment of the economy, typically when SMEs are reaching a slightly larger stage, and potentially when they're starting to trade quite significantly with other businesses, or most importantly, when they're starting to trade overseas. So I think if you spoke to the average person on the street, you've basically got a bank. But we know that a bank is made up of retail banks, commercial banks, or SME banks, and this kind of weird thing called a corporate and investment bank. Which no one really knows about, right? But you can just view it as, if the bank makes more money, they'll invest more people. So for the large corporates, they'll invest a lot more people. For the smaller end, they'll invest a lot more in digital. So that kind of, over the last 10 years, over the last decade, it's not surprising that we've got fantastic apps on our phone, because there's so many of us and they don't really make a lot of money off of us. So let's invest in digital and make that as streamlined as possible. Whereas the corporate banking world and everything in between, basically when you become a business which achieves about £1 million of turnover each year, you fall within that gap, which becomes business banking and corporate banking. And suddenly you're experiencing this business model in corporate banking that they've pretty much had zero investment in digital. Because the way that a bank has grown there is they've said, well, we've just got a small number of customers. We make a lot of money off of half of those customers, and we'll just wrap those in people, which are called relationship managers, and we'll send them out in their flashy Audis and Mercedes, and we'll keep them in check, and we'll offer a great service. Now, that has been the banking model for the last decade at least. But now everything has been thrown up in the air, and you are almost reaching that last bastion of banking that has not been digitized. We've seen investment banking digitized, right? We've all got the investment apps on our phone. We've seen retail banking. We've all got Monzo, right? We've seen payments digitized, right? One touch, Apple will come and claim that one. We're starting to see lending, retail products, right? Again, Apple will come and claim that one, buy now, pay later, right? But when have you ever said that I can get a digital SME lending solution from my bank? You didn't until COVID loans came along. Now everyone knows and everyone expects that when I go to my bank, I can get unlimited funds or a good amount of working capital from my bank because I experienced that in COVID loans. Now, in reality, that's a complete fabrication or a complete misunderstanding potentially of SMEs, that when they go back to their bank next time, the bank is going to say no for the majority of them. And you're going to turn around and go, but you gave me a C-bills loan and you gave me a B-bills loan. And the bank will say, yeah, but that's different. And if you're not big enough, they'll turn you down and you won't get any service. If you're big enough, they'll wrap you in cotton wool and they'll give you a relationship manager and they'll find all the products and all of the good stuff because they're making a lot of money off of you. Now, what TradeLedger is there to do is to make sure that that gap between what the best of the best experience and the large corporates experience, what we experience as retail consumers, starts to filter into that mid-market SME and mid-market lending space. So that when you do go back to your bank and you say, guys, I'm excited. I've just got a massive order that I need to fulfill. I need to manufacture this product and I need widgets I'm going to import from China, but they cost £500,000 and other material that I need costs another £500,000. Can you give me £1 million credit facility so that I can import those goods, pay them off and create a manufacturer product, and then I'll pay you back when I've sold my product? And as I said, that's the kind of scenario that, yes, there are solutions out there, but for the majority of businesses, because the bank cannot get access to the right data, cannot understand you as a business, because they're held back by legacy technology and this kind of outdated operating model, you will get turned down in most cases. And I can connect that back to that £10 trillion working capital gap. These are the reasons that good businesses don't get access to the capital that they need to, one, survive, and two, to grow. And that's kind of a simple business model.
I think it's the beauty of most business models are the best ones that are as simple as you can possibly get, aren't they? And looking at genuine issues around that. And I think that when we look at that and we think, I mean, you said this before we came on air, so I'm not going to nick it off you, but we were talking about the fact that the cost of living crisis is an individual thing. It's a people on the street thing, right? But there is an awful lot of pressure on businesses, and I think there was a lot of support, as you said, around the pandemic to allow businesses to continue to trade and to deliver. And alongside that, in 2021 and 2022, there was a lot of dry powder that existed from a couple of years off in VCs and private equity and even angels who are trying to thrust money at opportunity with big valuations, because the owners and operators of those businesses were in control at that sort of stage and could get higher multipliers and negotiate more. And then this sort of winter of discontent started coming with the Ukraine situation, oil prices, et cetera, and that seemed to have a dramatic effect there with the pendulum swinging the other way of the investors as opposed to the businesses. But what it also did was suffocate the investment into businesses that were effectively pigs in lipstick, for want of a better expression. And I think there's always been good money put behind good businesses, but the speculation sort of ended, and that's put an awful lot of pressure on businesses as well, right? What's the solution for that? What happens within that? Is that the sort of necessary cleansing of the marketplaces? Is there ways that those businesses survive and receive funding? Should they receive funding? What's your take on all of this?
I think it's definitely got to be on an individual basis about where businesses should get funding and whether they shouldn't.
Yeah,
that is not deniable, right? And I would never criticize a bank for making the right decision, as long as they have tried all that they can to understand that business and invested in the right areas to make sure that they can quickly get access to the data that really matters on that business. And that's something that I've seen throughout my whole career. Is I think there's a lack of investment in technology within banks and lenders that actually truly gives them access to the data that they need to make a good decision.
Yeah.
So what that results in is businesses are not getting the right product at the right time, at the right price, based on the data that is actually available out there in the market.
And what sort of data does that look like?
Well, it typically kind of centers around the entity and the business, and that can be a limited company, a sole trader, an individual. So we all know that there's credit bureau data out there, there's government data registries out there. Actually, in the UK, we're quite lucky in terms of being able to KYC and KYB a customer, because again, that thriving FinTech ecosystem and some of the data legislation that's gone through from the government has helped to create a really buoyant data market on the entities. But if you're a credit underwriter, it's not just about onboarding the customer. You're interested in the financial analysis and the financial risk associated with that business. And then finally, it's about the collateral that you're using to actually secure the loan. And it's those two areas that I think there's some huge kind of inroads that we've made, which is giving a bank through technology access to the right financial information. So good example, the last 10 years, the government has been pushing making tax digital. So small businesses, medium-sized enterprises, they're all using, or the majority of them are using cloud accounting software. And that data is available. But is every bank giving you the ability to share that data easily, quickly, in a way that is I suppose, intrusive to your life, to help to inform that financial analysis of you and whether you can afford to pay that loan back? I think you'd agree the majority of banks don't have that.
Yeah, 100%.
You look at kind of collateral associated to that, which is the next step that they'll look, because the area that we play in is never really unsecured lending, which means you focus the risk analysis not on the borrower, you focus it on the kind of collateral that you're securing, right? Like a mortgage. If things go wrong, you can always get your money back through that. And again, there's so many different forms of collateral that appear within that mid-market. When you're a small business, you don't have huge amounts of collateral, right? You've probably got the office laptops, you've probably got a few outstanding invoices. There's not much collateral in there, hence why founders or small businesses tend to put their founders' houses on as collateral or guaranteed. Or they'll take like a debenture, or they'll take kind of other forms of security. Now, as those businesses grow, you start to branch out into different sectors. And what the bank really struggles to do is to find out how much that collateral is worth if you've got this really complex business. So you take the average dairy farm, for instance. I like to use this one. A dairy farm, say it turns over £10 million. It's got a big contract with a milk producer, but they're looking for finance, and they have to fulfill this. Look at the range of assets that farmyard has. You've got a farmhouse worth money, which is owned by the farmer, or it could be owned by the business. You've got a silo full of stock and wheat that could be worth money, but you haven't sold it yet, or you haven't used it, but it's still worth something if you did have to sell it. You've got a barn full of hay or silage, that you could go and sell. You've got a tractor sat there that could cost £500,000. You've got other forms of machinery and equipment. Now, that farmer turns up to the bank and says, I really need some money tomorrow because I've taken this big order from a milk producer who want me to fulfill this order, but they need all of this stuff valued, i.e. the collateral needs to be valued in order for that farmer to say, okay, well, I'll give you a £2 million facility that you can draw down whenever. But that farmer has to sit there and scramble to prove that the collateral or the assets that they own are worth as much as they are. And again, the bank's scrambling, the bank's sending out specialist valuers, they're sending out special collateral management capabilities. And I think that is kind of really key. I love to use that analogy because that should just be a facility that the farmyard gets to be able to function and to be able to grow
Because what you're talking about there is time that strangles, that strangles businesses anyway, isn't it?
Yeah.
When if you're looking at that, you're looking at a ticking time bomb.
Yeah.
And by the time you made a decision, the company can already be defunct. And I think that's you're absolutely right. It's such an important area to get right, isn't it? And you were talking about a word I like before about the hygiene factors that allows businesses to be investable and such like, and looking at what that looks like. So money comes into the right businesses as opposed to the wrong businesses. You've spoken there about the ability to have the collateral or otherwise within the business. Tell me what you mean by those sort of hygiene factors. What makes them backable?
Well, for starters, I think the bank has a responsibility, or the lender has a responsibility to inform the customer about what the art of the possible is.
Yeah.
Now, in many cases, that's telling the customer no as quickly as you can, rather than stringing them along for 90 days and then saying no. Because working capital, by its very nature, you're trying to plug a short-term gap. You're not trying to secure a mortgage for 25 years. So I think it starts with education about what products are available. And if you land on any corporate website, you'll see so many different products. You'll see trade finance, export finance, reverse factoring, dynamic discounting, term loans, business credit cards. Like what? I'm not landing on your website because I want any of your products. I'm landing because I want a funding facility. You should tell me what assets I've got and give me a way to share all of the assets and share my business data with you. And then you tell me what's right for me.
Yeah.
Don't position them to me on a website when none of these make sense. So that's kind of the first phase. It's just awareness of what solutions are and sort of what the need is of the customer, without having to have a relationship manager sit there, right?
Yeah.
That's where people fall through the gaps. A relationship manager can come and explain that, and they can kind of handhold through that process. A digital experience sends you down that same route. It kind of assumes that you need to know what product you need before you even kind of view it. So I think that is one of the hygiene factors. That then gives you kind of everything that you need to kind of indicate, I'll just chuck my data in. Everything else should be kind of done for me. I should find out whether I'm investable or whether I'm lendable very, very quickly or not. So I can go and find other forms of funding, and then know that kind of what you're signing up for, right? Make it really clear. There is good stuff that's gone down in the industry, right? Making clear what you're signing up to when you're kind of lending. But I think it's really important that the customers end up with the right product.
Yeah.
Far too many times in this kind of segment of customers do you get people ending up on a credit card or a business overdraft just because it was easy and because they understood it, when actually there's so many different other forms of credit that they could have got access to that revolve around their business need. Invoice finance, for instance, like perfect product, just incredibly confusing for many people that take it out. And because it's very costly to serve at the minute before technology steps in, like quite unattractive in terms of its terms, right? But potentially the best product that is out there that flexes to what the business needs at that point in time.
And so how do people make that decision better? As in what's right for them?
I think this is not their responsibility, I would say.
Okay.
I think this is a responsibility of the banks to change the way that they approach it. A banker once said to me, I think they'd left the bank at the time, isn't it funny that you go to the bank and the first button that you see is apply here or apply today. Like that's not particularly inviting for you as a customer. Why are you uputting in the hard work if the bank is going to make money off of you?
Yes, it's the upside down customer service model, isn't it? Yeah.
Completely the wrong way around. Why is the bank not offering you a service that says, guys, look, I've got something that like you might want. Like, we understand you as a business. Like, I'll direct you to a site. You can share all of your data safely, and I'll very, very quickly and rapidly tell you what the right product is for you and whether we're the right bank for you, without having to get on the phone, without having to speak to someone. You can actually do that. So, yeah, it's not an easy thing to solve, but data is at the heart of it. And I would say the pressure or the onus should be on the bank, not on you as a business trying to find out what the right product is for you.
So we've spoken about trade ledger as the sort of salvation here into a serious economic issue, for the UK and for UK PLC as a whole. Tell me that you mentioned vision at the very start of this conversation. Talk to me about where you are now and what you see as this utopian model of how you save the world.
Well, as I said, our business model is a kind of enterprise technology. So we're not FinTech, we're a bit kind of tech only. We only supply our tech. We don't do any sort of financial services. So me joining the business, I was the first person that had any sort of financial or banking experience. So I think that sets us apart from the FinTechs that can only ever nibble away at this issue that is that working capital gap. So the way that we envisage solving it is quite simple from a technology perspective. I don't think we're doing anything groundbreaking just yet. We're just putting in some cloud-based SaaS technology that gives the bank a way to get data out of their customers and be able to pass it through their different various teams to get a facility set up, to monitor that facility and to manage the risk around that collateral. I don't think that's groundbreaking. We're not using any sort of blockchain-based next generation crypto technology, despite the name. We are just using good cloud-based technology, modern technology and open APIs to actually construct a solution that we think fits into the market. Now, the final bit is, where do you fit it into the market to actually solve this gap? We don't believe that there's going to be this mega FinTech coming along that's going to challenge the banks overnight, especially in this space. But we do believe that this corporate banking and commercial lending is well behind where it needs to be in terms of transformation. And it, again, is the area of the bank that the internet hasn't reached yet, let alone kind of modern solutions like trade ledger. So they have to catch up, and they have to catch up very quickly. And if we solve it for the banks, if we solve it for the top 20 banks in the world, I mean, we've got some very serious players already on our books that we're trying to kind of provision. We can actually make a much bigger dent in the working capital gap, as opposed to going and being a financial services provider ourselves and disrupting the banks, as everyone has done, off of VC money over the last
exactly. The banks have been very good at just sort of accepting that there's some disruption coming in, basically absorbing them, haven't they? It's this whole concept of a completely different model is the banks are very, very adept at recognizing that there's going to be change. So let's invest into it and lean into it and then move it further forward. I think it's really interesting. I've had two FinTech focuses in the last 48 hours. And both of them have been in areas there which have been, I guess, left behind in the technology evolution of the world. Insurance tech yesterday, and then this corporate banking world, and looking at a problem that is so, I guess it's one of the most regular or most common problems that you see in the world. And see a business recognise that and how little investment there is into that particular space, into improving it, is remarkable. But what a great opportunity for you and the team. So let's finish on you and trade ledger. You've been talking about this journey. What does the next 12 months look like for you guys?
Well, we survived, right? We survived probably the worst 12 months or the worst 24 months in the history of FinTech, certainly in the UK, potentially globally. And
I guess a bit of that actually played into your hands as well, didn't it? If you look at the exacerbation of the problem, it must have been a reasonable period for you to be in that business.
Yeah, there's an element of luck within it, an element of very good decision making, which makes you lucky. Nothing, as we discussed before, like nothing quite makes you focus more when money's running out, the industry is kind of going through some very, very difficult challenges. And you need to survive as a business. I always look at other competitors of ours that started off and they got 50 million from day one. Yeah, they are dead. They're dead today. They don't exist. Amazing, so although this is hard, the only way to do it is the hard way. And that's what I tell myself anyway. When me and my founder talk about that down the pub, there is only one way to do this, and it is the hard way. And I like to think one day it's going to be the most satisfying way to do it.
Definitely.
Yeah, I mean, moving forward, I mean, we're continuing the way that we are. We're a glutton for punishments. We like working with the very large banks, which means that things move slowly. But we're innovating as much as we can to bring new products, new solutions to the market, which help the banks be more efficient, help them provision more lending. And I think we're quite excited by, obviously, this is a challenging time in general, but there has never been a bigger demand for working capital from our clients.
Yeah.
And I think that doesn't change. They're coming to us saying that there's no way that I'm investing in unsecured lending, not in this market. And there's no way that I'm investing in mortgages and commercial mortgages, because look at the loan to values, like they're fluctuating because we don't know the price of the assets. So actually, where do we invest? Why don't we invest in working capital? It's what our customers need. It's a secured product. It's flexible in the sense that it's only, it kind of fluctuates based on what the value of the asset is. So yeah, I'm kind of excited over the next 12 months, or have been for the last 12 months, because we've seen a lot of interest in what Trade Ledger can do in a very quite niche and forgotten about area of corporate banking. And as we transition through that period, it won't, I suppose, the conversation will turn away from, oh, we have to heavily monitor our existing customer base in case there's kind of pent up risk into it, very quickly to that this market is going to grow very, very quickly, very rapidly coming out of this recession. We need to be there to win market share. Yeah. So you've got the challenger banks sitting there going, well, if the banks aren't in a position to capitalize on this growth, we have a huge opportunity to go and capture some market share of them. What do we need to actually differentiate ourselves? A quick, easy, affordable way of onboarding new customers and provisioning lending to them. So either way, you're either targeting at the big banks who are moving a little bit slower, or you're targeting at the slightly smaller challenger banks and the kind of fintech lenders to support them. And yeah, it's quite exciting to look at kind of all of our different range of customers and what they might need. But we should stand to be in a good position in sort of the next year or so, given
I'd definitely say that's the case, and I love the fact what you're looking at there. I think we're in the eye of the storm, and I think there's a lot of people there who've been swinging and punching and gasping for breath over a couple of over 6 months, 12 months, 18 months or so, off a pretty tough time for 18 months before that as well. We had this sort of breather for 6 to 12 and then came out of it. But I think what you encouragingly said there is, look, we are going into a phase there where there'll be an upside, as there always is, as the tale as old as time tells us, that when you're going through the storm, there's a golden sky at the end of it, as they say, and I think that's a very exciting thing. And I think products like yours that allow companies there to feature for that, to look for it, for companies to take advantage, to prepare now, for that, are going to be the ones that speed off, and that's where the opportunity is made. That's where your growth happens, and that's where you make yourself a business there that is primed for success there afterwards. So I think it's really, really interesting. And I could talk about it for a lot longer, but Roger, I'm going to tie things up. I'm going to tie things up now with you by just talking about who should be reaching out to you, who are good businesses to be talking to you right now, and what's the best way for them to get in touch with you.
Well, as I said, we specialize in banks and lenders. So any banks out there that want to reinvent or reimagine their lending processes for small business and I suppose working capital solutions, but also for anyone that's kind of interested in working in this space. We're developing a product that, as I said, is not groundbreaking in what it's doing with brand new technologies. It's very well trodden path for technology companies. So yeah, the biggest thing for people like us is attracting the right talent, and sort of bringing them into the business. I've definitely seen the talent that we've brought into the business being the ultimate decider as to whether we succeed or fail, as most businesses have, right? When times get tough and people step up and they thrive in this environment, that's when you've got a good business, I think, and people pull together. So yeah, beside the banks, it's kind of looking for good people and highly motivated people that want to come and challenge what the banking sector offers today and sort of bring them forward into the modern world.
It's exciting, that, isn't it? And I 100% agree with you. I think this is a real good time to see steel. And I think I was speaking to a lot of people in my space over the last couple of months, and I think there's a definite separation between people who've come in pre and post pandemic and the sort of difference in adaptability, to what's happening in the marketplace. And I do think it separates, the good from the great, and the average from the good pretty quickly times like these. And And look, my soapbox for many years has been that people are the fuel of any business, and if you get great people, you've got a great business. Even if you get great people, you can make your business awesome. If you've got average people, no matter how good your product or idea is, it's always going to be very difficult to get to that sort of phase. So, look, reach out to good businesses. And Roger, it sounds like you're very much on that sort of track. So, what's the best way for them to get in touch with you? LinkedIn?
Yeah, prolific on LinkedIn. So LinkedIn is always the way forward.
Well, you've got an invite for me waiting for you. So I'm looking forward to connecting and seeing this prolific nature. Looking forward to sharing this with everyone on it in the next few weeks as well. And Roger, it's been great having you on the show. Thanks for joining us.
Likewise, Toby. Thank you very much, and have a great Easter.
You too. Thank you very much. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.